This is the FM Gold channel of All India Radio. In the program Money Talk, now we bring you a dialogue on reduction in home loan rates and related issues. The participants are V. Raghuraman, former Secretary General, ASSOCHAM, and K. A. Badrinath, Policy Editor, Financial Chronicle.
Mr. Raghuraman, you are aware that the financial market is going through a lot of churn because of as it is directly linked with economic growth and inflation. Lots of issues involved, especially in the banking sector and the cost of money. I guess in the last money policy review, RBI governor had surprised the markets by not increasing the interest rates. This everybody thought. This happened in mid-December. And now we are heading for one more money policy review sometime later this month. There have been a lot of issues around whether how the interest rates will move, what is the kind of situation, what will be the impact for consumers, what are the linkages backwards towards the macroeconomic fundamentals, how are they going to behave, and that kind of stuff. In this kind of a situation, do you think that the Reserve Bank governor will oblige and either keep the interest rates at this level, or will he cut or will go up?
We have been really worried about the inflation, which has been very stubborn, and we have not been able to grapple with it in spite of all the measures which have been contemplated or taken so far in the last 3 years. And surely there has been a sort of trade-off between growth and inflation. Now there's a tipping point which has come, because if we do further, as we see the IIP numbers, they are showing negative or very sluggish growth, which shows that unless the interest rate is taken care of, there won't be any spurt in the economy. And we find that the RBI governor took a gamble last time by not actually revising the rates, because he felt the food inflation, especially with non-cereals, are the ones like fruits and vegetables, which are seasonal and which actually were hyperventilating with respect to the kind of inflation numbers on the food sector. So now that the fruits and vegetable prices have started heading south, and also there's a feeling that this will stabilize because of record food grain production which we have. So I think there is a feeling that it will be possible for the Reserve Bank governor to hold the rates, if not bring it down. So there is a possibility that the economy has bottomed out, and probably that with the government trying to initiate measures to stimulate investment, I think the Reserve Bank governor will definitely be looking at the figures with respect to the reduced current account deficit, especially with imports also slowing down compared to that of last year, especially though the exports have not done that well, but surely they are much better than what it was earlier. So that shows that there is some amount of confidence which is behind RBI governor's statement, and also possibility that yes, the interest rates will hold or probably they will be moved down.
Wholesale price index has shown a downward slide. It is now hovering around 6.3% or 6.1% as per the December 2013 figures. Now we are expecting any time the inflation figures for the to come up, sometime another 1-2 days, and it is expected to see somewhere around 5.9 to 6.1%. Now, but the issue is that the consumer level, when you and I go to the market, it's still you will experience a double-digit inflation because of the prices. I do agree that RBI governor did take a big gamble, and his gamble seems to have paid off, in the sense that the vegetable prices have gone down, the fruit prices have gone down. Still, they feel that the core inflation, there are still structural problems there, and henceforth, it might be still a tough call for the RBI governors to sort of think about downward revision. Possibility is that you might keep it there at this level. But do you think this will help the consumers, or in terms of reviving demand for consumer goods and services? So what do you think will happen to the consumer? And also, if you see, as per the RBI figures, even the industry bank credit has not gone up in a big way.
The reason is very clear. You see here, the investment appetite is yet to catch up. The reason being is a depressed market. You look at the automotive sector. In fact, the real thing can be gauged from the automotive sector. is still in the negative territory. You find the commercial vehicles, all that, they are not doing well. So one other thing is that if you want the investment cycle to begin and also really to go ahead, surely there has to be some movement from the government. That government is really quite serious. Apart from other measures which are being taken, that inflation will be on hold, oil will be brought down. And there is a feeling today that if the government, even today, if you look at the food grain stocks the government is holding, if we take today the world prices of food grains have really shot up. It is possible for government to really see and actually manage. It's possible. But I don't know why so much of food is being hoarded, because we have got so much of buffer stock which is much beyond our limits.
Which we cannot even store.
Sure, and I think if we go on to this state levels, you can have $18 to $20 billion which come, because today, especially the cereal are really in the world market, there is a problem. But if you really look at from our point of view, to see that investment comes back, for that two things are very necessary, which the banks are grappling with. The NPAs coming out of infrastructure, especially look at the power projects, and also the type of holdups which are happening due to environment, other factors. But I think because of the latest thing which we are hearing from the Environment Forest Ministries, and also the thing is that the government is also concentrating and sitting with states and others, probably the investment cycle is being revived. Whether this is the point, and if this is the thing which is really happening, and the NPAs are going to be reduced, it is possible that the RBI governor may keep this in mind. But most important thing is for us to see that many of these infrastructure projects which are on the ground really are not taking off, should actually get off the ground. The second point is that there has to be continuity, and also the government should ensure that there are not going to be any more retrospective and other kinds of decisions which are taken which actually put a dampener. And people should, and there is a feeling today, yes, as if that the government may renege on any of its actually principled contracts or whatever it may be. Because if you look at from the oil exploration point of view, the kind of gas pricing, etc., all things seem to be mired in controversy. And whether we will be, and as the bold step taken with respect to revision of the gas prices from April 1st, whether we will be able to stick on to some of those which are already done. But again, we find some populist measures which are coming back with respect to raising of cylinder caps, etc. It's putting more strain on the sector, and this will definitely affect the NLP rounds and others which are there. So I think this is a sort of a chain reaction, and in an election year it's very difficult for us to expect that there will be a quick turnaround. Surely the downside, and probably this will keep RBI governor in check.
Point is, when you are talking about the investment revival and things like that, the manufacturing growth you are seeing, especially the negative growth that you are seeing, and even next 1 or 2 months, you are not seeing anywhere even onto the positive territory. Most of the estimates say that 1 to 1.5% there would be decline in the industrial growth. If that is the case, how do we see any hope of revival in the industry cycle into the positive zone? And plus, secondly, when the investments are not being made within the country, and the biggest charge against the Indian industry is that they are actually holding money abroad, and they are trying to put investments abroad rather than doing business in this country. So if that is the case, don't you think industry also needs to share the blame for not doing business in this country and putting more emphasis on?
It is not the question of more emphasis. The question is whether there is an environment for business to really put in the money and predictably get the right kind of returns. There cannot be just fits and starts. There has to be continuity and also direction in which we find that yes, government means business. There are other countries where you find that business is being welcomed, and it's that the prime ministers and the presidents lobby for jobs in their country. But in our country, it's a different thing altogether. There is a sort of feeling as if private sector, cronyism, and all sorts of things which come in. And this shows that we are yet to grow up with respect to providing an enabling environment within the country with coordination between center and states, and also to ensure that we will have interministerial coordination. In fact, these are very large and also bigger type of issues which cannot be solved in a short period of time. Surely the course, if they are clear that yes, government means business, and it is prepared to really bite the bullet and take, like some of the things which are happening with respect to environment, with respect to the case of stranded investments in road sector and others. I think there is a possibility that the investment climate will actually brighten, and there is a great feeling, and also among the international investors and others, and when they are interested, surely our businessmen will also get interested. The reason being that they expect after the elections a stable government, and also probably they feel that the Indian economy has already bottomed out and it's only going to go up and up.
When you talk about interministerial coordination, holding up projects, which is the biggest issue in terms of industrial revival, don't you think that you have seen the Cabinet Committee on Investment that which was fixed set up, and after that directly the Prime Minister is taking charge of the investments, and several of the issues that were till now being impeding investment have been cleared, and we hear everyday reports which say that so many lakhs of crores worth investments have been cleared. That was one issue. The second is, even on the environment issues that you have raised, you have seen that there has been a change of guard at the Environment Ministry with the intervention from the highest level. So there seems to be some positive action at least there.
No, but this is actually rustling is there, but whether there's movement. The point is very clear, and it will be seen with POSCO because the South Korean president is around, and you look at the case of other stranded projects, especially when you look at ArcelorMittal or somebody who is able to put up a plant in China, why is he not able to put up in India? And Vedanta, look at many of the groups, they would like to expand here. Why we are not actually taking quick action? For example, Kane Energy, which Vedanta took over, could have actually raised the production from 120,000 barrels to 300,000 barrels. Why we take so much time? These are all issues which need to be looked at with interministerial coordination. I don't think that the committee or somebody can actually look at it and push it. Only they can actually see where are the kinds of bottlenecks and how they can be relieved. But it takes time to get to that. And this is an issue which cannot be solved overnight.
For example, when we are thinking about, industrial slowdown, there is, pressure on the investment cycle is broken and things like that. Where do the consumers come here?
See, the question is, this kind of crisis or the kind of difficulty actually gives us new opportunities to find out ways and means. Already, do you think the industry will not do anything? They have been doing, in fact, cost-cutting, manner in which we are able to better ways of actually cutting down production costs and also, but here there is a big problem with respect to what we call as delays which happen. In fact, this is what increases transaction costs in this country, especially the movement. You look at the kind of blockages. We don't have a unified Indian common market even today. And you look at from Delhi to Bombay to move a truck, how long it takes. I think these are all issues which cannot be done just like sitting and solving and in a cabinet committee on investment. It has to be with center, state, local administration and proper coordination. And this is something which is quite a challenging job in a country like ours because there are diverse interests. And how do you balance them? The question is not one of commitment. The question is one of effective action. And that is the question. In fact, I don't think any government, anybody who is not committed towards the kind of things which you are talking about.
I hope that any government, whether this gets over all these bottlenecks and makes life much easier for consumers, industry as well as agriculture. Thank you so much for being with us.
You were listening to a dialogue on reduction in home loan rates and related issues. The participants were V. Raghuraman, former Secretary General ASSOCHAM, and K.A. Badrinath, Policy Editor, Financial Chronicle. It came to you in the program Money Talk, produced and presented by the News Services Division of All India Radio. This program is also available on our website news.air.nic.in. You may email your opinion about this program at airnsdtalks@gmail.com.